What's up, y'all? This is Sun Go, and today is 2022, the year and January 14th. And tonight is Friday night in Korea. And of course, I was having my uh, happy Friday nights. And one of the things that I plan to do is, of course, doing YouTube Live on Friday night. And it's going as I have planned. And of course, just like yesterday, I'm going to talk about what's been up with stock market lately and the things which is really hot in this market. And of course, if you've been watching me for a while, the website that I use are, Market Beat, Zax Investment, and Yahoo Finance. And those are the things that I'm going to keep looking at right now. And let's see what we have tonight, okay? Okay, last night it was all greenish, and now it's all reddish. It's going up and down, up and down. If you're not organization, usually people mm, whom I talk to or whom I hang out with, they're all individual traders, right? You know, uh like myself, including myself, like I could be easily mm, get affected by up and downs of this market, but for sure, when this up and down uh, uh, is getting bigger and bigger, what we have to do is try to stay calm and be neutral about this. Because even if it goes up and down, at the end it goes up someday. Because the only companies that I listed on my watch list are all good companies. Mm. It's all good companies and headquartered at in the states, which is good because it's got a lot of potential. Um, so anyway, let's see what articles we have and look through some of the interesting facts. Okay. Mm. Nasdaq near a 10% correction isn't the sell signal you probably think it is. Bank stocks, JP Morgan, Wells Fargo, Citigroup earning top views. Stock market news live up. The stock future extended losses after tech sell-off. Goldman Sachs sees gains of up to 60% in these three beaten down stocks. If you're a risk-averse investor worried about market highs, Kathy Wood outflows grow as die-hard fans face bigger tests. Warren Buffett says these are the best stocks to own when inflation spikes. With consumer price at a 40-year high, it's time to follow. There's no way the stock market goes up this year. It probably goes down pretty aggressively, says hedge fund Hunter Calbes. Mm. Is Roblo stock a buy right now after reporting key November metrics? Mm. An important investor reminder that could make or break your portfolio in 2022. Fed has to be far more aggressive than the street thinks, says academic who called out 20,000. Dow Jones future signal with market sell-off to continue. Dow Jones falls, Ford stock passes milestone, Tesla gets hammered, Nvidia dives despite this. Now I'm thinking to myself, like these days, I was thinking like it would have been better if I had money because at that point I thought it was the great chance for me to invest some of my money into stock. But then now I'm looking back. It was fortunate that I had no money at that time, and even now, because I mean, if I had a lot of money, then I would have had a lot of losses by now, because for sure, these days what I see is a downtrend, not uptrend. It's been going down and down continuously, and a lot of experts here, and the vibe here says it's gonna go down rather than going up. So, hmm. so possibly, I don't have to be really anxious or like mm, what I have to do is just stay calm and just look for a moment to calm, because chances will come for sure. Is PayPal stock a buy right now? Five overlooked tech stocks poised to be the household names of the future, according to this money manager. India has a stretch goal for the IPO valuation of its state insurance giant. Kathy Wood's ARK Invest ETF buys $70 million in spot linked to stablecoin operator Circle. Nvidia, multiple reasons to expect more growth. Okay, enough of picking articles, and now let's read it. First article we have is opinion. Nasdaq near a 10% correction isn't the sell signal you probably think it is. Hmm. The odds that stocks will rise are no different after a 10% decline than they are before. There's nothing magical about a stock index hitting the 10% decline that constitutes what Wall Street considers to be a correction. So we need to stop treating this 10% mark as meaningful. Uh, it isn't. The odds that stocks will rise are no different after a 10% decline than they are before. Hmm. This is important to keep in mind now that the Nasdaq Composite Index comp minus 2.51% is losing ground quickly, down 2.5% on January 13 alone, and off 7.8% from its closing high on November 19, 2021. To show that this 10% correction threshold has no significance, I analyzed all occasions since 1928 in which the S&P 500 SPX minus 1.42% dropped at least 10% from a prior high. In some of these cases, the market continued to decline and entered into bear market territory by dropping at least 20% from a market high, a meaningless line in the sand. Hmm. Okay. What explains this result? You may be surprised by the data in these charts, but you shouldn't be. The stock market is forward-looking. The market's level at any given time already reflects all currently known information. That includes how the market has performed up until that time. For purposes of illustration, let's imagine that breaching the 10% decline threshold really did indicate that the market's prospects has suddenly deteriorated. In that case, investors would immediately sell stocks upon such a breach, pushing prices down even further until the market equilibrium. This is how market efficiency works. The net effect would be that the threshold stopped being meaningful. What does all that mean for next time the market does breach this 10% threshold? If you're backward looking, you can bemoan a 10% decline. but as an investor, looking for it is what you want to do. And just a general opinion by the author uh, named Mark Cubitt. So basically, what he says is 10% correction is not a strange thing. It's a normal, as it has been. And you would probably think Nasdaq near a 10% correction isn't the sell signal you probably think it is. Isn't the sell signal you probably think it is. Isn't the sell signal you probably think it is. It's not. It's normal. Goldman Sachs sees gains of up to 60% in these three beaten down stocks. If you're a risk averse investor worried about market highs, they might be for you. Let's see what we have. Twilio, this cloud communication platform, helps software developers interact with users through embedded features like text chat, phone calls, and video calls. The company was founded in 2008 and today has more than 250,000 active customer accounts. Twilio. With the S&P 500 index only slightly below its all-time high, bargains remain hard to find in 2022. If you want to go after the hardest tickets, prepare to buy a pretty penny for them. But not every stock with potential is shooting through the roof. Goldman Sachs recently issued buy ratings on several stocks that definitely haven't been market darlings of late. Here are three companies Goldman considers hidden gems. Business is growing rapidly. In quarter three, revenue increased 65% year over year to $742.2 million. For quarter four, management expects revenue to be in the range of $760 million to $770 million. And yet the stock hasn't been a market favorite. Over just the past 3 months, Twilio shares have tumbled 30%, compared with the S&P 500 index is 7% gain the same period. Goldman jumped on Twilio last month with a price of target of $350, about 6% worth of upside from current levels. Okay, Twilio. It's 4.38% down. Let's put on my watch list. Wow. It's been going down continuously. Boeing Company, and what else with FedEx Corporation. Let's look at articles related to Twilio. Three explosive stocks to buy right now. Key points. The market off isn't taking into account how strong these companies are. CrowdStrike is growing its customer base quickly. Connected TV will drive the trade desk revenue growth in the future. Twilio's management has a bullish prediction for the next 3 years. Explosive high growth stocks have been hated by the stock market lately. Most are down significantly from their highs, and it's time to take advantage of these sale prices. Three stocks with massive upside potential are CrowdStrike, the Trade Desk, and Twilio. Each has both explosive growth and exciting 2022 prospects. Additionally, all are more than 30% below their all-time highs. giving investors a chance to buy at a bargain price. Okay, CrowdStrike. Oh, it's already on my watch list. Okay, it's 30% below. It's more than 30% below their all-time highs. Giving investors a chance to buy at a bargain price. The trade desk. Well, let's see what this is. CrowdStrike. It's been long since I saw this company last time. So, there's so many companies on my list that I sometimes forget what I added. So, CrowdStrike's mission is simple: to stop breaches. To achieve that, CrowdStrike created a cloud-native security platform, securing network endpoints like laptops and phones. Its software can be used by employees everywhere, not just in the office. Many cybersecurity companies exist, but CrowdStrike separates itself from the field with its threat graph. This competitive advantage uses artificial intelligence to gather data from other attacks across all of its customers and then use that information to prevent attacks locally. Businesses have rapidly adopted CrowdStrike's technology. CrowdStrike's revenue increased 63% to $380 million during the third quarter by adding over 1,600 net new customers. This brought its annual recurring revenue up to $1.5 billion among more than 14,000 customers. While up profitable now, more than half of CrowdStrike's operating expenses are sales and marketing costs, showcasing CrowdStrike's willingness to capture every available customer. Should management decide it is pleased with the number of customers and wants to transition its focus to prioritizing profitability, CrowdStrike could slash its marketing spend and turn a profit. The trade desk, let's see what this is. Advertisements are everywhere. A fine line exists between annoying ads and useful targeted ones. The trade desk demand side platform matches advertisers with different opportunities across the internet, ensuring ads reach their intended audiences. Companies can even link their advertisement campaigns to certain business objectives to determine if they're having a measurable effect. Many companies cut back on their advertisement spending during 2020 because of the uncertainty caused by the pandemic, but it came roaring back in 2021. The trade desk benefited from this trend and saw its revenue grow 39% to $301 million during quarter three. Over the last 9 months, its revenue has been up an impressive 55%. Unlike the other two stocks, the trade desk is profitable and sported a nearly 20% profit margin. Mm. The trade desk sees a huge market opportunity in connected TV advertising. Inside the US, more than 87 million households are potential advertisement targets and represent a significant improvement over linear TV advertising, with tracking cookies going away. The Trade Desk Unified ID 2.0 solution respects user privacy while maintaining relevant advertising information. And customers have found UID 2 works better than cookies. Uh, okay, the Trade Desk is going to be up on my list. It's already on my watch list. Uh, like the one that I talked about before, um, the trade desk also below 30%, their all-time highs, giving investors a good opportunity because now its price is lower than its value. And here's another article. Kathy Wood offloads grows as die-hard fans face big test. The loyalty of Cathy Wood Legion of Fans may be finally waning as the New Year bloodbath in speculative technology stocks hands the stock money manager a miserable start to 2022. I know, indeed, including myself, my sister, and me, uh, loves her and the way she trades. She's definitely on star in terms of trading in this stock market, and uh, most of the companies that she invests some stock into are all good ones, not like not like the ones that has no potential at all. It's got a really good potential. Uh, so I agree on some level. I mean on some level. So like I also spend some of my money into ARK investment. Uh, I know it's been going down. I know it's gonna go up someday, but at the beginning of this year, uh, it's been not so good. I know. Uh, the author um, didn't have to write like this. I mean, like waning. I don't know the word waning. Offense may be finally waning as the New Year bloodbath in speculative technology stocks. Hence, the star money manager a miserable start to 2022. Investors pulled $352 million from Wood's flagship ARK Innovation ETF. Wow. On Wednesday, according to data compiled by Bloomberg, there was the biggest outflow since March. Okay. The withdrawals come as ARK languishes at the lowest in about 18 months. ARK Investment Management main exchange traded fund has dropped more than 15% since the start of the year, as top holdings like Roku Inc., Zoom Video Communication Inc., and Tile Health Inc. are caught in the tech roach. While the flow is small compared to our assets overall, its non-ETF still boast about $25 billion. Hmm. Okay, let's go on to the next one. Warren Buffett says these are the best stocks to own when inflation spikes. Uh, didn't we talk about this before? Consumer. Uh, what was the word? Consumer, like the daily thing that we use. Like water, tissues, eateries, like things that we have to buy uh, for living our lives, you know, stuff like that. Let's see. Price levels continue to rise at a rate we haven't seen in decades. December U.S. consumer prices surged 7% on a year-over-year basis, the fastest pace since June 1982, when inflation hit 7.1%. If you are holding cash, spike inflation means serious consequences for your savings. Buffett highlighted two characteristics that help companies thrive amid high inflation: an ability to increase prices easily and an ability to take on more business without having to spend too much. American Express, Coca Cola. Yeah, he's a big fan of Coca Cola. Apple, okay. Mm. Recession resistant business, whether the company is booming or struggling, a simple can of Coke is still affordable to most people. The company's entrenched market position also gives it some pricing power. Besides, Coca Cola can always rely on a trick it's used in the past, keeping its prices the same, but subtly reducing its bottle size. Factor in its strength from its iconic brand portfolio and the fact that its products are sold in more than 200 countries and territories. After all, the company went public more than 100 years ago. It has survived and thrived in many periods of high inflation. in his portfolio since the late 80s. Today, Berkshire owns 400 million shares of the company, worth approximately $23.1 billion. There's no way the stock market goes up this year. It probably goes down pretty aggressively. Bass predicts the Fed could back down from a telegraphed plan to raise interest rates and withdraw the quantitative easing, through which it has been supporting the markets. Don't expect stock market gains in 2022 if the Federal Reserve sticks to its guns on rate hikes and tightening overall financial conditions, says Kyle Besh, founder and chief investment officer of Hayman Capital Management. An important investment reminder that could make or break your portfolio in 2020. When it comes to the Federal Reserve's looming interest rate hiking cycle, speed up movement should be top of mind among investors that will have to navigate the evolving liquidity backdrop with precision. I think it's the speed at which the Fed will have to move that probably defines market behavior. Not an interesting subject. Ford stock passes milestone, Tesla gets hammered, Nvidia dives despite this. These are the 5 best EV stocks to buy and watch now. What are the 5 best stocks? Walsh tops Wall Street estimates with a $5.8 billion for a core profit. 3 interesting industrial stocks to buy now. Virgin Galactic stock is in bargain territory. Fire erupts at Kuwait refinery, severely injuring 5 people. World track Wall Street and retreat. U.S. futures edges up. Three stocks coming out hot in 2022. Caterpillar, this major manufacturer of construction and mining equipment, Caterpillar. Builders first source. More investors aware that there is a huge supply imbalance going on in the residential real estate market, which is a good reason to consider adding shares of Builders first source. Delta Airlines, if you're looking for a deep value play and have a very long-term horizon, Delta Airlines is perhaps one of the most attractive stocks in the industrial sector to consider adding. Virgin Galactic stock is in bargain territory. Space tourism pioneer Virgin Galactic Holdings stock has collapsed below pandemic lows after its initial space flight carrying its chairman Richard Branson. What initially seemed like a step forward moving towards significant revenue generation was pushed back as the company delayed commercial Astron service to Q4 2022, with ticket prices at $450,000 per seat. The company is making progress behind the scenes, fortifying its infrastructure, technological innovations, and strategy as it sets to emerge stronger during the downtime. Risk-tolerant investors seeking exposure in the space tourism industry with a long-term horizon can watch for opportunities to pull back in shares of Virgin Galactic. Interesting. Interesting company. Mainly what they do is make people go to the space and have a tour in the space. Hmm. An integrated aerospace company develops human spaceflight for private individuals and researchers in the United States. It also manufactures air and space vehicles. The company's spaceship operations include commercial human spaceflight, flying commercial research, and development of payloads into space. In addition, it engages in the design and development, manufacturing, ground and flight testing, and post-flight maintenance of spaceflight vehicles. The company was founded in 2017. Is headquartered in Las Cruces, New Mexico. Three stocks coming out hot in 2022. What is good oil services stock? Liberty Oilfield Services came out swinging on the first two trading days of the year en route to a 25% week one gain. Hubspot sell off a buy opportunity. Hubspot incredibly run finally took a turn for the worse late last year. The customer relationship management software upstart has failed to regain its mojo since its third quarter earnings report got mixed reviews. After brief post earnings recovery, the stock fell 18% in December and is down under 20% year to date. Hubspot. A sell-off of that magnitude would suggest that there has been some sort of warning about this year's performance, but that hasn't been the case. Instead, the decline has been largely driven by profit-taking, the latest assault on high-multiple tech companies. While still not cheap by any valuation measures, HubSpot is starting to stabilize and is likely a good buy opportunity here. Is Mongodb stock or buy? Began selling off after Christmas in conjunction with Nasdaq's downturn and has slipped into bear market territory. With advanced micro devices growth prospects, the impact of the global semiconductor shortage has been widespread. Advanced micro devices has been one of the most resilient. Management stellar job of working through the challenges propelled the stock to an all-time high in November 2021 before a benign low volume sell-off took hold. Hmm. Okay, let's call it a day, and I'll see you guys tomorrow. Enough of reading articles. Chances are that about 11 days left before I receive my income. Once that day comes, that's the moment that I'm waiting. That's the day. Uh, that's the moment that I wait for. Okay, I'll see you guys tomorrow. Okay, bye bye.